Hello and welcome to another update video about the S&P 500. So it's time again for the S&P. I haven't covered it for a while just because, I'm so busy doing all sorts of things. And however, I'm looking at, maybe in the next video we can look at the long-term chart. I still have a few things to fix on that long-term chart, so not really prepared to show it today. Maybe we can do that tomorrow or later in the week. Until then, let's just cover here the short-term price action. This is of course not the count. This is how we had it in the last video. I'm going to move that around a bit. So obviously, if we have to assume that the wave 2 that we talked about, obviously we came off that low here, which was the October low, moved up in 5 waves. That's still my view, that we moved up here. This was an overshooting B wave. We came down, had here one reversal signal, came down into that yellow support and target area, and from here we started to reverse. I did at the time assume we might get one more low because this looked very much like a wave 4 triangle, but it was a very messy and boring structure. However, eventually the market did break out to the upside. So how do we count it? So I would have to count this as another 1-2 setup, to be honest. A very messy structure. But I would count the move up here that peaked on the, where is it, at 3,900, and I would have to count that as wave 1. And then here, the wave 2 low, yeah, I would have to put it here at the end. It's not great though. And I thought about different ways of counting it, but probably the best one is just to see it as quite a complex WXY pattern. So let me put that on the chart. So here is a W wave down, an X wave up in corrective pattern, and then the Y wave here, the end. So we've got a WXY, a 1-2 setup, and then the wave 3. Would have to assume this is a wave 3, a wave 4, and a 5. It's not a great count. The reason is this is not an impulse, but I can get 5 waves here in a diagonal pattern. A big diagonal in another wave 1. So all of these waves, change the wave degree here, these are basically 5 up, at least as far as I can see it, which means this would also count as a larger wave 1. My preference would be that this here is another wave 2 down, so that we had here basically a small A overshooting B wave and a C down in a 2, and we would now start to move up in the third wave. That should be a 4th and a 5th. Let me change the wave degree of this one here. Yeah, so of course the alternative would be, because if we take the fibs from the low to the high of that wave 1, you can see we reached in that wave 2 the 50% Fibonacci retracement. I mean, that's fine for a wave 2, but it could also just be an A wave down, here a B wave up, doesn't look really convincingly 5 wave-like, and now a C wave down. That C wave should then get into the region between 3,876 and 3,837. So if anybody is looking for a possible trade setup, if it gets down into that region, it might be an interesting one. Now I can't guarantee it will, but it might be a potential entry point, a pullback trade in this C wave, yeah. Or alternatively, it could also be another 1-2 setup, but that might not go down that low. So if we turn around from here directly and break out above the previous high at 4,060, I think we've got another 1-2 setup here. Which, yeah, the 1-2 setup of the third wave. So if I put it on the screen here, 1, 2, and then we should do this. So this would be sort of the fallback here, the fallback plan, getting into this region. Might be an interesting long trade, but the way we are going up, it looks like we're on our way into a wave 3 target here, and that we have another 1-2 setup here. So we've got a 1-2 here. 1 second. Now we've got this as a 1-2 and a 1-2 setup here. So 2 1-2 setups. Again, if we now break below the 3,963 level, then we have to assume we get into this way, green region, green support box that we just talked about. until we break below that level, we can focus on higher against that level. We also have an inverse head and shoulders here. You could say it like that. So basically here, left shoulder, head, right shoulder. And that neckline again would be around 4,060. Obviously, it's a bit of a, well, the actual neckline would be a bit, you know, diagonal sort of. Yeah, and the breakout above that level would take us then to the wave 3. And the target for the third wave would be the 1.618 extension. And then we're talking about 4,211. Then we should get a 4 down and a 5 up. And that should finish off this wave 3 and a 4 down and a 5 up. So that will be interesting if it's following that. Obviously, we can also calculate the target by taking the length of that head. I'm not really a fan of that, but you can try to, and that would actually take us, funny enough, to a very similar target. Basically, it matches that wave 3 target. So that's interesting. And that's sort of everything I can tell you at the moment about the S&P. I mean, obviously, because this is also a diagonal pattern, it's a bit of a messy structure that's evolving here. It's not great, right? And so all of this could also be an A wave up, a B wave down, and we could be doing a C wave to the upside. We won't know that really if the bear market lowers in until we get all those 5 waves up. This is only a 1, a 2, and a 3. There's a 4 and a 5 missing eventually. So a lot needs to be done to really confirm a bear market low. But I think, you know, it's looking good for the S&P this year, but there is no guarantee the low is in. Next video, we will look at the long-term chart, and I'll tell you a few more things about long-term options. If you want to see that, then feel free to subscribe to the channel, and then you'll be notified about the next video. Okay, that's my update about the S&P 500. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.